All right, welcome everybody. Today we're going to talk about something that may be different for some of you. What happens if you have a buyer that needs a special loan, a special needs buyer. And I want to turn the presentation over to Matt. He's going to tell you a little bit about himself and what he's doing, and we're going to go through some different kinds of loan types.
Sounds good. Yeah, appreciate it, Michael, and welcome to the, I guess, the broadcast, everybody. I was just going to give a quick recap of kind of who I am, the company, and then we were going to, if you can see the screen, we were going to jump into a kind of almost like a newer category of loans that, we're pretty well in tune with, and, just kind of another option, another, I guess, quiver in your arrow, or however that saying goes, to make sure nothing falls through the cracks, and we can try to help every buyer out there that we all come across. So first of all, my name's Matt Hoppy. I've been in the business a little over 20 years, and I work with Success Lending. And for some of you that may not be aware, Success Lending is really, for all intents and purposes, the in-house mortgage lender and option for EXP. We are actually owned in large part by EXP Realty and by Glenn Sanford. So some of the big benefits with that are that all the EXP agents I talk to are complaining about the stock price and where that's at these days. And we're hoping that once we get going and kind of get some more of these relationships, working with agents like yourself, we're going to help to feed that stock price, to boost that up. I would, all of you that are with EXP have those options, which is amazing. And then the other thing too is, though, for those of you that participate in the the revenue sharing program, there's actually a portion of our income and profits that get deposited into that revenue sharing bucket as well. So just a huge benefit for the EXP agents out there, and we're super excited to be on board with everybody. One thing to make really clear too is we definitely do, all day long, hammer out these loans for conventional loans, FHA, jumbo loans, high balance, VA loans, like all these other types of kind of normal programs, that people use, the majority of the time. And we do them, really well. I mean, we're closing in 3 weeks, 4 weeks, whenever we need to. So, get those things banged out quick. And then these non-QM loans are some of the, let's say more outside the box and creative options that we have, to really help make sure nothing falls through the cracks. And, home buyers out there, especially, some of those home buyers that don't fit into the box, from Fannie Mae, Freddie Mac, FHA, try to get some of these creative options done. So these are called non-QM loans, and the QM stands for qualified mortgage. And this is basically the definition. It's just some of these loans that do not meet the agency's standard documentation requirements by the CFPB. The Consumer Financial Protection Bureau. They're outside the box, and these are the type of things that they don't want to mess with. Fannie and Freddie, just simply don't want to deal with, basically. So it shows kind of 2 different programs on here. There's really kind of 3 programs. The primary one that we use like quite a bit, kind of falls under this category of the Spark Prime loans here. And really the main one we use is what's called a bank statement qualifying program. And with all of these programs, we do not even get tax returns from the buyer. So that's one of the big benefits. And these are really, really geared towards your self-employed buyers that that have some money. They make plenty of money, but they take full advantage of the tax codes, and they write off as much as they can to really minimize their income. So we've all come across it probably hundreds of times in our career, depending on how long you've been in the business. These buyers that make good money, and every single year they hammer on those deductions, and they don't pay, they try to really minimize what they pay in taxes. And that's great. Every year they do their taxes, but then when they try to qualify for a home loan, they kind of get punished because they don't show anything after they took advantage of legitimate like IRS deductions. So that's kind of where these fall in. So for the bank statement loans, for example, that would kind of fall into this Spark Prime category. Quite simply, we get 12 months worth of bank statements from a home buyer. We add up all the qualifying deposits on their bank statements over the course of 12 months. There's basically a simple 50% kind of debt ratio that we use, to take, to account for things like expenses and, expenses and, payroll and different things like that. And then that's what we use for their qualifying income. So it's pretty simple kind of mathematics in that regard. As you can see on here too, the minimum credit score is only a 660. So you definitely need to, far from perfect credit, and you can still qualify. You just need to have 1 year of housing history without any payments. Income ratios here, where it says DTI, that stands for debt to income ratio. These are like the same ratios for an FHA program. And so they get pretty aggressive with the income ratios that you're allowed. And you can, even being like by far what would be kind of considered the ideal borrower in many cases, you can still get qualified for these types of properties to buy a home. It really is a pretty easy as it sounds. To give you kind of a real life example, like just yesterday, I had or just last week, I should say, I had a home buyer who owned a restaurant. He owned a small Mexican restaurant around here. I got his tax returns to try to qualify him for FHA or conventional, and he showed about $1,100 a month in income on his taxes. Well, obviously $1,100 a month isn't going to get you very far, but we got 12 months of bank statements, and his bank statements were averaging about $25,000 per month in deposits. So basically, with him gathering that information, we went from $1,000 of qualifying income to about like, let's say $10,000, $11,000 in qualifying income to help this guy get qualified. So it really made a dramatic difference. If you see like on the bottom line here too, this does kind of depend partially with credit scores, but somebody with even a 680 credit score, can still go up to 90% LTV on the property, which basically means they need a 10% down payment only to get qualified. And the loan amounts are up to $3 million as well, which are about 5 times what a conventional maximum loan amount is for a normal conventional program these days. So you can see these programs get pretty aggressive, and again, it's kind of ideal for those self-employed buyers that simply don't qualify under normal tax return qualifying programs. So the other kind of option here under these Spark Prime programs is going to be very similar to the bank statement program, except instead of bank statements, we get a profit and loss statement from somebody's accountant. So same thing, no tax returns, no check stubs, no W-2s. We just simply get a profit and loss statement from the accountant. One kind of stipulation there is the accountant does have to be the same accountant they used on their taxes. So they can't just go grab a different accountant that that's not familiar with their situation and use them. But same thing. Up to potentially only a 10% down payment. Low bar to meet with credit score of 660. Housing history. One thing I missed before too is that there actually is an option for a 40-year amortization interest-only loan, and in that case, it really just kind of simply helps to really minimize somebody's monthly payment as much as possible. To kind of jump over to the green box here, this is kind of the third prong of these non-QM programs that we have. It's called a Dscr loan. It basically stands for debt service. Can't think of the CR now, but it's basically, in a nutshell, it's kind of like, it's basically a cash flow qualifying program. So kind of similar to a lot of commercial loans. Kind of same thing. We do not get We don't get W-2s, we don't get check stubs, tax returns, no tax returns. It just simply is based on the cash flow for the investment property. And these are for investment properties only. So you can't use this program for your primary home, but you just simply look at the cash flow for the property. In terms of the numbers that we use for the income and cash flow, it's just simply what the appraiser reports on the appraisal. So when they do an appraisal for a rental property, in addition to obviously gauging the market value for the value of the home itself, they basically also go in and look at like comparing comparable rental properties and rental incomes for the same properties in the immediate area, just like they do for the comps. So that's how we get that. There actually is still an option, even if the cash flow is negative on a property, there actually still is an option to get this done, even if it's negative. So, again, pretty aggressive. On a lot of these programs, on a lot of the DSCR programs, you'll see a prepayment penalty as well. And there are options to waive the prepayment penalty. So that is an option, or even to minimize the prepay. But the 5-year prepayment penalty basically is kind of what helps us get the lowest rate possible for the home buyer. So you can take that off, but then the interest rates, certainly a little bit higher on it. Kind of same thing with an interest-only option, a 40-year amortization interest-only option, even on this one, and credit scores in this down to 620. So 620 is obviously pretty aggressive. Some lenders don't even allow you to do an FHA loan with anything down in that credit score range. But and then if there is negative cash flow, just kind of bumps up the minimum credit score up to 660. So as you can see, these programs get pretty aggressive, and again, just trying to make sure nothing falls through the cracks for that situation. We've come across hundreds of times with the self-employed buyer that just doesn't qualify. So again, just kind of some of the highlights here. Up to 90% LTV to $3 million, no prepayment penalty. One thing to kind of clarify right here on the bank statement program and on the profit and loss statement is you can combine incomes. Where a lot of some other brokers out there, most others don't allow you to do this. Basically, what that means is if you have one, let's say you have a husband or wife that owns a business and they want to qualify on this bank statement program because they don't show anything on their taxes. And let's say the other partner, the other husband or wife not self-employed, let's say they just have a regular base salary at their job, you can combine those situations on the same loan. So you could have one borrower combining with the bank statement program, for example, and the other one being self-employed. Where most places do not allow you to combine those. So we allow those to go together. Obviously the 40-year amortization is just another way to try to get a more aggressive monthly payment. And then the prepayment penalty here. One thing as well is like these loans, we do not broker out either. We actually have are able to take advantages and do these in-house as well, which just kind of saves another layer. Where there are some lenders out there that do these, but pretty much all of them that I've heard of broker them out to another company. So everybody uses the same brokers for the most part. Like we can actually do these things in-house and get them done. You kind of see down in the bottom here, it's got kind of your targeted applicant. Obviously, a lot of you guys are on there, real estate agents. Obviously, I'm sure you guys are paid with a 1099 and self-employed. So, these obviously work for realtors just as well as anybody else that's self-employed. We've actually done a lot of these already for some even EXP agents, certainly. So this is just kind of like a normal scenario for these, where you have a borrower that's self-employed, owns their own business. On their tax returns, they take advantage of all the tax deductions due to the self-employed status. We deliver kind of the quote-unquote no tax return mortgage solution, and use the two main programs there, the bank statement deposits program and the profit and loss statement as income. These are just kind of some of the primary guidelines. I don't want to bore you guys with all the guidelines on these things. because so many of them are obviously like a case-by-case basis, depending on the individual buyer. But one thing is they do have to be self-employed for at least 2 years. That's pretty standard across the mortgage industry with any program. They have to have a little bit of a track record at least being self-employed. The default expense ratio, this is actually kind of another key factor where we can get aggressive with this, where a lot of our places don't, is that in the bank statement program and the profit and loss statement program, you basically take those numbers for all the deposits or the P&L income, and then they use a 50% expense ratio. So if somebody makes, let's say $10,000 a month with all those deposits, you basically divide that in half with your normal expense ratio, after expenses are paid, and you have $5,000 in qualifying income. So one kind of stipulation with that is if somebody is in a career, let's say like a real estate agent for a great example, where you don't have a lot of expenses, like a lot of you, obviously most of you, I'm assuming, are not paying for like a storefront property, where you have a big rent payment every month. You don't have people on your payroll. You don't have a ton of inventory that you need to have for a business. We can actually get a letter from your accountant to specify some of these things, and we can actually decrease that default expense ratio they use. So what that allows us to do is use a higher number for the monthly qualifying income for a buyer. So just simply helps you qualify for for more of a home that you're looking at. So that's kind of the third point here, is we can kind of take advantage of some of those guidelines and try to get a little more aggressive with helping someone buy. The profit and loss statement option, as I mentioned earlier, requires the same CPA as the tax returns. We have the 40-year amortization option with the interest only. Mixed income's allowed. I mean, that again, taking somebody that is using the bank statement program and adding on like a regular wage earner wife. Reserves, like some of these programs do require like cash reserves that you need. Some of them I've looked at, it's only like 2 months of cash reserves for a lot of them. Like typically it's like 2 months or 6 months. So basically that means if for cash reserves, if let's say somebody's mortgage payment is $3,000 per month, their principal and interest plus the taxes and insurance payment is $3,000. If you need 2 months of reserves, that just means that you have to have $6,000 in, like, just sitting in the bank or sitting in investments after your down payment and all those expenses are made. So that, again, not like too high of a bar to get qualified. And if for people that do the cash out program, you can actually use that cash out as reserves, which not a lot of times you're able to use that. The credit and mortgage events, you can get exceptions for those. If it's a qualifying exception, such as, let's say, medical expenses, divorce, different kind of like big time events like that, you can get exceptions on those. And and exceptions are definitely welcome for some of these things. Like really the only guideline where exceptions are not allowed are for credit score. So the credit score numbers that I had on some of those earlier slides are, there's no getting around that, unfortunately. But some of these other ones we can get a little more aggressive with. Again, just kind of another highlight, like no tax return options, mixed incomes allowed. Really try to go with the lowest payment possible for those that want, with the 40-year fixed rate with the interest only option. Like down payments as low as 10%. And again, the bar is pretty low for that. I mean, if you have a 680 credit score, you can qualify for only 10% down. And any scenarios you guys have, I'm happy to look at those things for you, obviously, and see what we can do to help get things done. And and that kind of goes for any of those other programs I mentioned too. Whether it's conventional, FHA, we bang those out all the time. Certainly a lot more of those programs than these non-QM ones, that we can handle. And these non-QM ones are some of the kind of like outside the box options that not a lot of people are doing these days. So we wanted to kind of highlight these things to start out with as to differentiate a little bit. But I'm definitely happy to help out you guys with any situations, any buyers. And since we're all on the same team here with EXP, try to kind of keep everything in house and help these buyers as best we can, and kind of help ourselves with hopefully with these stock prices and the rev share here too. But I know kind of went through a bunch of information, so I just wanted to open it up to any questions that any of you guys might have, and I'll certainly do my best to answer these for you guys as well.
All right. Well, thank you very much, Matt. Yes, they are a questioning group.
That's good.
I can pull them all up. For some reason I don't see that question. Anyhow, one of the questions I saw was about, do you do mobile home loans?
There are mobile home loans that can be done, but it does have to be a double wide mobile home. It can't be just like a regular single wide. There are some like specific guidelines on those with both Fannie Mae and actually Freddie, or I'm sorry, both Fannie Mae and FHA allow those, but they do have to be a double wide.
All right. How about out of state, like Arkansas?
For Success Lending right now, and here I can, if you guys have a video of my screen, I can actually bring up all the states that we are licensed in. We're licensed in about 40 different states. Let me grab this and I can show you on a map here.
You don't know Arkansas off the top of your head?
I actually do not know Arkansas. Here's the map though, right here. Can you see that?
Yeah, no Arkansas.
Yeah, no Arkansas. So, I mean, really the only states we are not in are some of the ones in the upper Northwest here, not Arkansas, Mississippi, Missouri, Kansas, the Dakotas, Nevada. I've heard Utah is just impossible to get licensed in for whatever reason in our business. So that might be probably one of the last ones, and then Montana and Wyoming. But we really try to cover all the states, especially the ones we got licensed in first are those where EXP is most popular, certainly. So we tried to bang those out right away. We actually just got Indiana like last week, like finally after trying to get that done forever. I'm not sure why that took so long, but.
All right. So how about a commercial 10 unit?
We do not. So we are like strictly a residential lender. And so that basically means anything from a condo and a single family home up to a 4-unit property. Yeah. And so we do those for, owner occupants, obviously, investors, obviously a lot of vacation homes and second home properties, especially the last couple of years, but 4 units is the maximum.
So Ida, who asked that question, if you send me an email, I have a good loan agent who only does commercial real estate, only does 5 or more units if it's residential, but does pretty much everything. Would this loan work for somebody that has diplomatic status in the United States, non-U.S. resident nor undocumented?
You know what? I might have to get back to you on that one. Let me actually write that down. So basically, like, did you say undocumented or DACA? I thought I heard.
No, diplomatic status, non-U.S. resident, but not undocumented.
Oh gosh, okay. Let me do this. I'll get an answer on that one, and I'll email you back.
So Solomon, if you send me an email, I can forward it on.
Yeah, that'd be great.
Actually, they have a copy of your handout, so he could send him an email, remind him.
Yeah, I would invite you guys to contact me. I mean, I'm a loan officer myself. I'm not here just like as a trainer. Like I primarily work with buyers, work with agents like all day long. So definitely reach out to me. I'd love to team up with you guys and get to know everybody a little better. And if anyone wants to do like a kind of more of like a one-on-one Zoom like this, I'm happy to do that. And we're in the game here to help you guys out as much as we can here at Success Lending.
All right. How about, did you cover Itin loans?
Yeah, we actually do have an option for Itin loans as well. Mm-hmm. So those don't really follow under, I guess they do kind of fall under the non-QM. We actually have a different broker relationship that does Itin loans. The one thing that's a little bit tough with those that we kind of run into sometimes is you do have to have a 25% down payment. So a lot of people that qualify for Itin, a lot of times that's kind of the biggest hurdle we've run into is the down payment amount. And we definitely do loans for like DACA recipients as well. Like those are no problem.
All right. How is the interest rate and closing costs compared to a conventional loan? I think she's just referring to the non-QM in general.
Yep, yeah, that's actually a great question. So typically, again, kind of depending on credit and depending on down payment, like usually the interest rates are around anywhere from like 1% to 3% higher than like a normal, let's say a normal 30-year fixed conventional. So 30-year fixed conventional, let's say is at like, let's say 5.75 right now, kind of somewhere in that range. So on these loans, you're going to be looking anywhere from like, a little below 7 to, even up to as high as like 9% right now. So these loans definitely are a little bit, the kind of the further you get outside the box, the rates are a little bit higher. And ideally what we try to do is get somebody into one of these programs to help them buy a home initially. And then, if let's say a year down the road, 2 years down the road, if they can qualify normally, we'll try to help them refinance back into kind of a more of a standard, like traditional program.
Let's see. What's the minimum FICO requirement? I think you covered that, but.
Yep, yeah. So for like the bank statement and the profit and loss statement loan, it's 660, and then it can go down to 520 for the Dscr loan, like the cash flow loan.
How much down payment is required?
Down payment is partially based on credit score. So, if somebody's got even like a 680 or above, the down payment's typically only 10%.
Cool.
And one thing too with I think I mentioned before, but with the cash flow qualifying is even if the cash flow is negative on these properties, obviously kind of depending on how much, but even if it's negative, in a lot of cases you can still get it done for somebody with that program.
All right, well, thanks. I don't see any more questions. You've all got a copy of the handout. So if you do have any more questions, reach out to Matt, phone and whatever. And you do not, by the way, one question, a lot of the people that are online aren't with EXP yet. I mean,
Okay.
they're going to be calling me soon, I know, to talk about that. But so you work with agents that are not with EXP?
Yep, yeah, we are definitely not exclusive to EXP agents. We work with everybody. Keller Williams, Remax. I mean, yeah, it doesn't matter. Yeah, we'll work with anybody and happy to do so. And yeah, happy to work with any of you guys. So if you have questions, I mean, please reach out. I mean, individually with my email, my cell phone's on there, texting. For those of you that are with EXP, like people contact me on workplace chat all the time. So we're in the same ecosystem that you guys are. And I always tell people too, one of the biggest questions I get is if we answer the phone on the weekends. And the answer is 100% yes. So yeah, don't be shy about that. We're excited to work with everybody and do what we can to kind of pull in the right direction and get things done.
Sounds great. All right. Well, thank you very much. I think we've exhausted them. At least they've stopped asking questions. Thanks everybody for attending.
Yeah, appreciate it, everyone. Thank you for the opportunity, Michael. Appreciate it.
All right. Bye, everyone.